Hi guys. So today is 16th of July and it's around somewhere 8:40 in the evening. Okay. So today the major agenda for the video is to talk more about my strategy and also look after how the month has progressed so far. So talking about the strategy, like I've been asked by many people to elaborate more on the strategy. So what I'll do is I'll try to explain how I trade or by I'll explain how I trade by giving you an example of how I traded this Thursday, the recent expiry, 14th of July. So if I say, like as I said, ki I start non-directionally, but as in when the day progresses, as in when I get the what I would say a hint of the direction by observing the price action, I adjust my positions with by incorporating the directional bias. Okay, so if we see on 14th of July here, markets opened somewhere around 16,000. Okay, so here I how I started was I started with a 400 point triangle. So here if we see 16,200 could be assumed to be a very good resistance for the day, and on the downside if we see 15,800 was supposed to be at, like it was a good level which we could have said to be hold, okay, on 14th of July. So I had sold 15,800 and 16,200 strangle, and here at like if we see it was very pretty neutral. Okay, my directional bias kicks in only and only after I observe the price action. So the rules for the what I would say, basically it's all the technicals, Dow theory and all. So here if we see, even though we've made higher high, like we made a low which was not which did not breach the day's low, but if we see on the higher time frame, like from almost last 3 4 days, we've been completely there's absolutely no momentum, but also we are not we've not been able to close higher than the previous day range. Okay, not even one day was higher than the previous day's range. So here definitely I'm not very bullish until and unless we get a close which is above previous day's high. So here initially the what I would say, the bias was always down on the downside. So I was always bearish biased over here. Okay. So initially when I started with a neutral triangle, the direction for me was very clear after this when we did not take away this previous day's swing high. So this was basically a swing high for 14th of July, which was very crucial. Like here prices would have definitely, like this would have definitely acted as a support. Okay. But we took off, like the market started selling off even before that. So after this candle, my bias turned into bearish. So what I'll ensure is whenever I'm selling strangles, I'll ensure that after this point there is no point in the day wherein my strangle is bullish biased. As soon as I get into a strangle, like these pullbacks are very sharp. Okay, so you have to make sure that whenever you have those pullbacks, you have to manage your strangle wherein you don't hurt, like you're not hurt on the bullish side as well. So what I'll always ensure is ki even if I am getting in a position wherein my P is, like obviously here what will happen is a call will lose a lot of value and P's will gain a little bit, not much because the momentum is not there. But as soon as the C's lose value, you will have to keep on adjusting if you have to maintain that bearish bias. So that is what I do. I roll down my calls as per. So here if we see from 16,200, I rolled it to 16,150. From 150, I rolled it down to 100 and 16,100 say 50. So this was, I was very quick in doing that. Okay. So here also if we see, I slowly, like I tried not to shift my put, but I tried to take more and more credit from my C's. Okay. And here, as soon as we were approaching the 16,000 level again, like I was in good 10 points profit, I think. Sorry. One second. Let me check. Yeah. So this was around 11:16. So around this, it was very clear कि at the break of 16,000, like as I said, I think I told this earlier, कि these round numbers are very dangerous. Like there are a lot of institutions and bigger money chasing these levels. So there are people who will be defending those levels, and there will be people who will be attacking those levels. So at these levels, it is better to stay away from trading because there will be very abrupt spikes. Okay, so as soon as I was here, like at 11:16 on this candle, I immediately closed my entire position, and in which I was sitting on 10 points of profit. Okay, so here I closed it completely, and after this, I think I had I don't remember exactly when I reinitiated, but let's check at 1 o'clock. Okay, yeah. So after this base formation, like after I was sure ki the base is formed, and I didn't expect it to go further downside. Okay. So I was not expecting it to break the day's low again. But had it been a normal day, I would have immediately exited it right away after this day's low was broken. But it like because it was Thursday and I knew key options had to go to zero if it's out of the money. So I tried to adjust my position even after this low was broken. But basically I entered after this green candle. I entered after this green candle. Okay. And my thought process was ki now the day's low won't be broken. But ideally, had it been not a Thursday, I would have exited as soon as I would have seen this candle. But I did not exit that day because I had already gained a good amount. Like I was firstly not sitting in loss, I was sitting in buffer profits. Like I was sitting around say 15-16 points of profits. So which is why I did not exit here and I tried to manage it somehow. So if we see, I ended somewhere around 17 points of profit here. Okay. And here one more thing which I can give you out as a learning here, like which I would say can be helpful to you all is this thing. So if we see here, I had written this thread. Okay, like this thread basically tells ki what all things do I observe before I adjust my positions. Okay, so here it says ki I identify, like basically I have a watch list wherein I've kept all the components of Nifty. Okay, so here if we see basically Nifty Bank, IT, Pharma. These are the three major indices which affect Nifty, and these are also the major stocks which have a high weightage in the index. Okay, so I track these stocks and I see this four indexes majorly. Okay, so whenever we are at a breakout point, I identify which of these is either breaking out or breaking down. So I say if Nifty is approaching 16,000 level, so to be confident whether it will be breaking out or it will be a fake breakout, I identify which of these index is stronger or which of these index is what I would say breaking down or weaker. And on basis if I get a yes from both, like the Nifty is also bullish and also the underlying which is driving Nifty is also bullish, I would expect ki the breakout will sustain and it won't be a fake breakout. So this is how I ensure ki I don't get trapped in a fake breakout. Okay, so this is the pricing of options, like uh, intrinsic value or extrinsic value. If you have to check this, I've very detailed. I've wrote about it in a very detailed form in this tweet. Okay, so you can check this out. I'll not be telling it here. It's very like not very difficult. Like it's very easy. Okay. Then I see the open interest data, like how the bigger players are positioning. Okay, and yeah, this is the thing which I made use of. Okay, so if we see on whatever return is, observe the strikes below or above the strikes sold. Okay, so here if we see at the end. Okay, so this time I'll be talking about like 30 or 35 minutes before the expiry. So I had sold this 15,950 C. Okay, so here if we see I would have sold it somewhere around here 15,950 C, expecting it to expire worthless. Okay, so but what happened was I sold it somewhere around, I don't know, okay, 1.75 I would have sold it around. And as soon as we got this candle, it like if we see at 310, the high of the candle was you can check the high here. Okay, so the high of the candle was 15,954. The again here the high is 15,950, close to, again the high is 952. Even the last candle went above 950 and 955 was the high. So ideally, if we see 950C should be having 5 rupees of value. Okay, if it would have closed at 955, but it like the options the expiry or the what I would say the pricing of options is defined on the average of last 30 minutes data. So even if it would have spent another 10-15 minutes over here, the average would have dragged it down to somewhere below 15,950. So here if we see 15,950, like I would like to tell you all ki how did I get that conviction to held this 15,950 call, and it has already like 2,300 quantity. So even if say we close 5 points above, like even if we close at 16,900 and sorry 15,955, like 5 points away, like 5 points for Nifty is not a big deal. Okay, so even if we would have closed 5 points above, like I would have lost some 10-12,000. So how did I get that conviction to hold this until 330? So I'll tell you all the reason behind it. Okay, so if we see, firstly, for 15,950 call to have any value, 15,950 ka P should go to 0. So when I had this call short, I was observing 15,950 P. Had like if you would have observed 15,950 ka P at this point in time, when the index was going above 50, the P never dipped below 9 rupees. Okay, so the very reason it did not dip below 9 rupees told ki the weighted average that the index was expecting was 15,940. So had is if 15,940 is the expected expiry, I am nowhere in trouble. So the basic thumb rule that I use is to check the corresponding opposite option of that strike, and if that goes below 5, like here had the 15,950 ka P went below 5, I would have exited this at whatever cost, like whatever it would at that particular time, whatever price it would have been trading. Okay, so what I observed was 15,950 ka P had it never dipped below 9, so I was confident of holding this until the end. So yeah, this was one thing which I hope it would have added, like you would have learned something new out of it. So yeah, like this is how I trade. And if we talk about how the month is progressed, so if we see, like the total account is 37 lakhs, the total available margin is 37 lakh 69,000. So out of this, on an average, say every day I use around 35 lakhs ka margin. So my target was 1% every week, right? Like this is what I told in the last video. So if we say 35 lakhs ka 1% is 35,000 every week. So if we see here for the month of July, I earned 75,000 and 6,000 is for charges. So around 69,000, which is pretty much on the track. And if we see, the first week was not very good. Like I managed not very much. But yeah, so this was not a very good week. Like I lost around 7 points on Wednesday and another 2 points on Tuesday. So which was okay. Like surviving is also a very good thing in this market. Okay. So even if the first week was not so good, I managed to get back good points in the second week. So if we see the second week, the first week I earned somewhere around 10-15 points, I think. Like here the sizing was 1800. On Tuesday I lost another 2-3 points. Wednesday again I lost 2 points, I think, less than 2 points. And on Thursday I got around 17 points. And Friday was again not a very like okay kind of day. I earned around 2 points. So I was back on track because of the second month. But yeah, one important thing which is very basics of trading, or that is the thing which I have been on the traders. Like if you observe this, no point in time my losses are much beyond my capacity to take them. Okay, so if we see, the highest profits would have been, yeah, this 54,000, and the highest loss that I would have taken is 13,000. So the risk reward factor is very important. Okay, the average losses which I would have taken is hardly 3, 4, 5,000, and this was the one wherein I had lost around 7 points, which is very much acceptable compared to what I earn. So 54,000 I'm earning. When things go in my favor, I earn at least double of what I'm losing. Here, like thankfully I've not experienced my worst day till now, like in at least last 1 month. But yeah, like what you have to understand is, even if you're right 50% of the times, you make shitloads of money if you have proper risk management and the risk reward is very much in place. So yeah, like if we talk about this month, we are quite on the track. Like 2% comes out to be 70,000. We're like 2,000 short of it, which is okay. Like we'll make it up in next. Like we'll try to make it up in the next 2 weeks. Okay. So yeah, that's it. That's it for the video. Thank you.